So I've had several students ask me some specific questions on problem 535. So what I thought I would do is go through this problem. We're going to focus on some specific issues. We're not going to go through the complete problem, but I wanted to help you sort of get a start related to what you can do in regards to answering the question. So we have a lot of information related to Grow Master. We have sales, we have some narrative related to expenses as well as cash collection. We have specific expenses. By the way, these expenses are annual expenses, and please keep in mind that depreciation is a non-cash event. As we're going forward, what we want to do is we want to first initially identify our cash receipts. Our cash receipts are coming from sales, and we will go through that. We also want to calculate our cost of goods sold. Now, our cost of goods sold is important because what this is going to determine is the cash payments for our accounts receivable. And then finally, what we want to do is we want to develop a complete cash budget. The beginning point of, in this case, is $57,700. Keep in mind that your numbers are going to be very different than that. But again, the beginning number is, in fact, given in the narrative. So the narrative is that the beginning balance is $57,700. So let's go through this problem, and I'm going to explain it how I would address this problem. So what I did is I put this problem into Excel. And we're going to walk through some very specific things related to this, and hopefully we'll be able to understand the beginning part of the problem so that you can work through the rest of it. The first thing that we want to understand is our sales. So what I did is I transposed the sales from January all the way through July. And the reason I'm including both before and after the quarter that we have is because the information that we're using actually is using information coming from prior periods as well as subsequent periods. So it's important that you have enough information so that you can work through the problem. So we have the sales figures here. Sales figures $900,500, February is $1,006,300, and so forth. And that's coming from the narrative related to our sales. Now, what you see here in the first piece is that Grow Master has an excellent record in accounts receivable and expects to continue to collect 60% of billings in the month after the sale, and the remaining 40% collected 2 months later. So what are we talking about here? So we have our sales. So this is our sales column up here. And then what we have is our 60% is based upon the 1 month prior. So what I did here is I set up a row, and in this row is what I'm doing is I'm calculating the prior period, $900,500 times 60%. And then if you simply just scroll this across, what you see over here is we are going the prior period, and so the 40% is coming 2 months later. So what we have here is we have 40% times the 2 month period. So in March, we're collecting 40% of January sales of $900,500. So I simply then sum the columns, and summing the columns is I'm summing what is collected 60% in the prior period and 40% 2 periods later. You go through April through May, or April through June, and this is exactly what we're seeing, is we are summing the collected last month and 2 months prior. So we have our cash collected for the 3 month period, and that is the cash that is coming in. There's no other cash that's coming into the organization, so we now have our cash that's coming in. These numbers here are going to relate to what we see over here, which is our cash receipts in our budget. So our totals here essentially are going to replicate what I see. And again, your numbers are going to be different. So the idea is that what you want to do is you want to look at this from the perspective of what we actually have in terms of the framework. In our next situation, what we have is we need to determine how much we are actually using in our cost of goods sold. Now, this number is not cash. We then need to figure out how we're actually paying these bills. But what we have here is cost of goods sold. Growmaster's largest expense is estimated to be equal to 40% of sales dollars. 70% of inventory is purchased 1 month prior to sales and 30% during the month. For example, April 30th, in April, 30% of April's cost of goods sold is purchased and 70% of May's cost of goods sold is purchased. What we have here is we have our 70% and our 30%. So our 70%, essentially what we're saying is that what we have is we are looking 1 month prior. So our cost of goods sold are items that we purchased 1 month prior. What we have is this is our 30% as of the period. Okay, so we go through this, and this is actually why we need our July number, because our July number is going to be coming forward. Now our cost of goods sold essentially is coming from 40% of our sales. So 40% of our sales is coming down over here. So we have in June we have sales of $1,408,000. 40% of that is $563,000. The 70% 1 month prior again is where we are using these, and so or where we're actually purchasing these. So the purchase of goods is these numbers that we see down here. And again, it's 70% 1 month prior and 30% the month of the sale. Now, these numbers here are going to be transposed into our problem. So we see our problem in the next piece is what we want to determine is how much we actually purchased. And these are the numbers that we actually purchased, and these are coming from our table. Now, the next piece of this is trying to figure out how much we actually paid. So how much we actually paid is going to work through this narrative right here. All purchases are made on account. Historically, 75% of accounts payable have been paid during the month of purchase, and the remainder, 25%, the month following the purchase. So what we see over here is the payments. So we are essentially taking a look at 75% times the amount purchased, and that's coming straight down, and then the 25% is coming from the month prior. So as an example is our goods that we purchased in January, 25% of those are paid in February, and so forth. Okay, so what we see here is April, May, and June. So April, May, and June is our cash payments, $474,813, and so forth. And these are the numbers that we see right here. So these are the cash payments based upon the budget. Now we're going to put everything together. So the first piece of this is, and again, keep in mind that April's number is given. May, June, as well as the quarter are going to be what we are looking at based upon our calculation. So collected from sales are the numbers that we calculated. So then we need to determine the total cash available to spend. Payments to inventory, these are the things that we calculated just a minute ago. Wages, let's look at the narrative here. So in relationship to wages, what we have here is hourly wages and fringe benefits estimated at 30% of the current monthly sales are paid in the month incurred. Wages and fringe benefit is essentially 30% times our sales, and our sales January is $900,000, and so forth. So that's number And again, we're looking at these three numbers over here, which is April, May, and June, 474, 813, and so forth, and 474, 813. The wages are given based upon the percentage. Then what we have is we have the salaries. Well, if we look at our salaries number here, is we can assume salaries 321, 400. We can assume that those are distributed evenly throughout the year. So $321, $400 is going to be the number that's divided by 12. It's going to be the salaries that we see right here. Advertising, same thing here. Property taxes. Now the assumption that we have is that the property taxes are going to be paid at the end of the quarter. So if you see what we have in terms of property taxes, you can divide that by 4 and insert that number as at the end of the quarter. Insurance is divided by 12, utilities divided by 12, and of course depreciation is a non-issue. We do have the fact that we are estimating income, and we're going to have a 40% tax rate, and they're paid the month following the end of the quarter. So what we would be looking for here is, in terms of our income taxes, it's going to be paid at the beginning of the quarter for the prior quarter. Okay, so you can do the estimate here. There is a narrative related to the fact that if cash drops below $50,000, that we are going to borrow money. So in the first period, we're going to borrow money, and then we're actually going to be paying back this money over the next couple of periods. Okay, so I'm not going to go through every specific detail, but the idea is that I wanted to go through a number of details related to this problem to help you out, and I certainly hope that this information has been valuable to you.